If you're a crypto investor, I hope you're doing okay. I hope you didn't faint when you looked at the losses that you had in last week. But in this episode of This Week in Tech, we need to talk about what the hell is happening. The main news of the week is gonna be about the death spiral of the TERRA ecosystem. If you don't know anything about it, you're about to understand one probably of the most important moments in crypto history. And if you're in it, I hope this is gonna give you a more technical understanding of what the hell is going on. That being said, I'm also going to talk about other things. Don't worry about it. Some of them are funny, some of them are interesting, and hopefully this is going to make this week a little bit better if you're somebody who has a lot of money in crypto. I'm trying, okay? And if I fail at cheering you up, remember, there's other things in life than crypto and money. It's going pretty bad, but hold on. I think it's going to get better at some point. One of the most interesting and biggest cryptocurrencies in the world entered a death spiral and lost basically all its value. Hold on, because I'm about to explain you both what was the promise of this cryptocurrency and why it failed in the simplest words possible. What I'm talking about is the TERRA algorithmic stablecoin. Let's understand what these two strange words mean. A stablecoin is a cryptocurrency that is pegged to the US dollar or to any other currency. Usually these ones are pegged to the US dollar. That means that one coin is supposed to always be equal to $1, and therefore it's easier to trade and it's easier to use, and well, you don't risk that the value is going to go up and down in theory. Now let's explain what is an algorithmic stablecoin. Some stable coins, the traditional ones like Tether, you may have heard about this term, they make sure that the value of one coin is $1 by having a bunch of assets. These assets can be government bonds, it could be real US dollars, gold, whatever you want. But they have something that guarantees that the value is $1. At least in theory, because a lot of these stable coins, also Tether, fail to disclose exactly how many assets they have to back the value of their currency. So this is where algorithmic stable coins come in. The concept behind algorithmic stable coins is to have a decentralized mechanism that guarantees transparently that the value of one of these coins is equal to $1. Now let me explain you how the TERRA ecosystem works, and I'm in a great position to explain you because I'm Italian and I can understand the two funny words behind the system that TERRA uses. There are two coins. One is called Terra and the other one is called Luna. Terra in Italian means earth, and Luna in Italian means moon. And the earth and the moon attract and repel each other. And that's exactly the mechanism behind the Terra and Luna currencies. Terra is the stable coin. Terra is supposed to always have a value of $1. Luna instead is not a stable coin. It's a currency and the value can fluctuate based on the market. The interesting thing, and this is the algorithmic part of algorithmic stablecoin, is that you can always trade $1 of Terra for $1 worth of Luna. And this is the trick that, in theory, allows Terra to always have a stable value of $1. Let's try to understand why. Imagine that the value of Terra goes down to 90 cents. Well, then people are going to be able to trade 1 Terra for $1 worth of Luna, which means that they instantly made 10 cents profit because they get $1 of Luna for 90 cents of Terra. That means that a lot of people are going to want to do that because, well, it's free money, right? Everybody wants to make money. And so they're going to start buying Terra, and that means that the value of Terra is going to go up until it reaches $1. If the value of Terra suddenly goes higher than $1, let's say $1.10, then it suddenly makes sense to convert Luna into Terra. Why? Because $1 of Luna is going to give you $1.10 of Terra, and you made another profit. But if you do that, then there's going to be more supply of Terra, bringing the price down to $1 again. So that's the little system, but notice how the only reason why this system works is because people believe that Luna and Terra have some value. If people suddenly decide that Luna has no value and the value of Luna goes to 0, well then you cannot do this system anymore, because you can even try to buy a trillion, gazillion, billion, zillion of Luna. If it's worth 0, 0 times a billion, gazillion, trillion is still 0. So it's not gonna help you bring Terra back to $1, and Terra is gonna go down to 0 as well. That's basically what happened. At some point, the Terra coin broke the peg, which means that the value went down from $1 down to even something like 35 cents. And the price of the Luna ecosystem, when people realized that it seems to be impossible to re-bring this equilibrium to $1, started to go down to almost zero. It fell from roughly $80 to 0.10. It's like worth nothing now, basically. But let me explain you why this thing was important for the entire crypto ecosystem. The founder of this TERRA ecosystem knew that this could happen in theory, and so he bought a lot of Bitcoin. And so he said, guys, don't worry. If the value of Luna goes really down, I have a lot of Bitcoin, and I'm gonna use this Bitcoin to start, balancing the price again and bring TERRA back to $1. And so he had to start doing it. He had to start selling a hell lot of Bitcoin to try to rebalance the value of the stablecoin, which means that a lot of Bitcoin got sold and also the value of Bitcoin went down. But so what happens when the value of Bitcoin went down? That also his effort of selling it to save his project started to be less effective because Bitcoin started to value always less and less money. And so you see how this whole castle that in theory will work started to crumble at an insane speed. I'm talking about a couple of days, basically, resulting in something called a death spiral. So I'm recording this video on Thursday, the 12th of May, and right now I see little hope for the TERRA project. I will probably say that this whole thing is dead, which makes us learn a bunch of different things. All these systems are extremely brittle. As soon as people stop trusting them, then the whole castle crumbles. And so these kind of things make us really remember that a lot of these projects are built on promises. They're built on the idea that people believe that these things have value, and therefore they have value because people believe in it. But people can change their mind. People trust it's something that you earn, but then you need to keep. And if you lose it, the whole castle crumbles and people lose a lot of money. Google just had its annual I/O conference, and there were a lot of cool AI things that you have to see. So these are my favorite things of the conference, but there are also other things that they announced, like Pro earbuds, the Pixel Watch. The most interesting things, though, are in AI. The first thing that they announced is a feature called Magic Eraser. Basically, you take a picture of something, and if there's an object in that picture that you don't like, you can just cancel it or change the colors so that it blends in more in the picture, which is pretty cool. I really like this feature. The second feature, which is also super cool, it's called Scene Exploration. Imagine you're in a supermarket and there's 100 different kinds of chocolate, and you want to find something that is really good, has high reviews, and let's say that has orange in it. Well, you can just take your phone, scroll it through all these images, and say with your voice, find me the chocolate that has orange in it and has great reviews. And the AI is going to identify using computer vision all the different kinds of chocolate and match them with all the reviews that Google has. And then it's going to try to point you towards the kind of chocolate that you want. Isn't it cool? It's amazing. Google also announced a super cool feature with their AR glasses. It's basically a live translation. Imagine you're talking to somebody that doesn't speak your language. If this person has these AR glasses, they will see on their lens, on top of you in augmented reality, a live transcription in their language of whatever you're saying. This will be super cool, and maybe it's gonna allow me at some point to record these videos in Italian so that you can see the subtitles on your glasses. Wouldn't it be super cool? Spero che ci possiamo provare presto. The Vatican Church is entering the metaverse with a series of holy NFTs. Jokes aside, these NFTs are probably not holy, but they are interesting, and let's talk about them. They are the result of a partnership between Human 2.0, a non-profit organization that is owned by the Vatican Church, and Sensorium, a company specialized in metaverse experiences that work with people like David Guetta, Steve Aoki, and now the Pope. Pretty cool. There's something controversial, I think, though. The Vatican said that this initiative is to democratize access to their art. The Vatican has an insane amount of art. If you've never been to the Vatican museums in Rome, I highly recommend you go. That place is wild. But you have to travel to Rome, right? So they thought, let's take all this art and put it into a metaverse experience, which will be cool, and I do agree that that will democratize access to art. But they mentioned NFTs, which means that they probably are gonna sell something, some tickets or some memorabilia, I don't know what, in form of NFTs, which is not a way really to democratize access to art, considering that 95% of Bitcoin is owned by 2% of the world population. So the crypto space is not exactly an example of something that is equal and democratic and everybody has access to. So weird and controversial, and I hope that their execution is actually gonna make it something that is gonna democratize access and not just make them or somebody else profit from NFTs going to the moon, let's say. A data broker is selling location data of people that went to abortion clinics. This company is called SafeGraph. Let's understand what they do. A lot of free apps like weather apps or some silly games have to make money somehow. So what they do is that they allow companies like SafeGraph to put a little piece of code in their app that monitors your location, and they record that data in an anonymized way, which means that they cannot sell the information they use specifically within a place, but they can sell that information as an aggregate. Why do they do that? What's the value behind this data? Well, some companies can use this data to take business decisions. Let's say that they can monitor the fact that in aggregate, more people went to Zara last month than 2 months ago. Well, then people that trade stocks can say, hey, you know what? Probably Zara stock is gonna go up because a lot of people are going there. They must be selling a lot of clothes. But the problem is that this kind of data can be used also for negative applications. And one of them is what we're seeing right now. This company, SafeGraph, can also sell data about people that went to Planned Parenthood clinics. And there's a lot of different ways that this data can be used in the wrong way. First of all, even though the data is aggregated, sometimes there's so few people in the aggregated groups that it's possible potentially to go back to who was the person that went to the clinic and target that human being. And anti-abortion organizations have already used technology to try to deter people from going to these clinics. An example is Christian and anti-abortion groups that started making targeted Facebook ads where there were abortion clinics to try to deter people from actually aborting. And so the fact that this data exists and it's available for sale for really cheap, by the way, it's like $160, it's extremely dangerous. So SafeGraph decided to stop selling that data, but now there's a bunch of researchers that say, hey, actually we would like to have this data. It could be used also for positive use. For instance, researchers could use this data to try to figure out how different laws are impacting the use of Planned Parenthood. There's a lot of different things that you can do with this data, but again, the problem, once again, is that these companies are collecting this data without people knowing. First of all, I mean, now it's a bit easier with the new updates on iOS and Android, but it was the Wild West some years ago. And the kind of use that you can do of this data really depends on people. Some people want to use this data for good. Some people really don't give a fuck and they want to use it in the worst way possible. Thank you for watching this episode of This Week in Tech. I have one quick thing to tell you. I'm thinking to change the date where these episodes and these videos come out. Just because Saturdays are nice, they're chill, but I also want to have a free weekend and it's kind of stressful in the morning to just push it out. So I'm thinking that I'm going to move the day to Thursdays probably. What do you think? Do you really like Saturdays for these videos or would you be happy to have them during the week? Let me know and let's talk about it, okay? Otherwise, I'm probably gonna skip next week so that you're gonna get the video during the following week on a Thursday. That's the idea at least, unless you want me to change my mind. Let me know in the comments. I'll see you next time. Ciao!